because you are one on NBFC only this panel actually all our banks. So I think this is you have great responsibility on your soldier to speak from the NBFC side. One and
Yeah.
then the new thing, or maybe I think it's not a new thing which is happening in the last many years also, this NBFC to NBFC co-lending.
I would like to start with that where we are, where Muthoot Capital as a part of MPG Group, where we stand as of now. No, so the thought of entering the co-lending space, it came approximately 18 months ago, wherein we thought, ki, yes, let's enter into this space and try, what we can in terms of engaging with the small NBFCs. Specifically, we have chose the portfolio of two-wheeler at that point of time. Gradually, we moved into the used car, and then recently we have introduced our co-lending partners with CV also, commercial vehicles. The intent is again to grow, diversify, and wherever we can, because in co-lending we do have various range. People engage in two-wheeler. In two-wheeler, there are player who only does new two-wheeler, then there are player who only does used two-wheeler, then there is a third segment called EV. So we just want every partner to be unique into their range, and to be and to possess a geographical expertise with them. We chose partners across Pan India in order to explore various geographies and take the expertise which that particular NBFC possess. Till now, we have been able to onboard 8 co-lending partners, and we have been able to build a whopping co-lending portfolio of 800 crores as we speak, wherein in each of the NBFC we are a principal partner, wherein we are providing 80% of our capital to them. Right now we're in the process of developing, and in the process of onboarding three more clients, three more NBFCs, wherein we know that because initially we found, yes, there was an issue in terms of tech, in terms of onboardings, in terms of opening of escrow accounts and all those process. The major thing is, whenever we onboard any sort of NBFC, whether it is a small NBFC or a mid-sized NBFC, because idea is to have a win-win situation for both of us, because the kind of yield which a new two-wheeler will give vis-a-vis the kind of yield which a used two-wheeler will give or a used car will give, there are a lot of things wherein we need to take it, that is, with this yield, whether this NBFC is able to operate in market or not. All our players, wherein we have entered into the co-lending partnerships, they are having market experience of approximately 40 odd years, wherein they have their own dealerships, or they have started their own NBFCs, or they have worked with various sectors of the bank under various locations. So this helped us in understanding the process, and when, as I said, going to pan India without burning the cash, because we have utilized their expertise. Yes, the overall yield for a principal partners becomes lower, but yes, the chances of burning the cash will almost become zero in these stages. So now, then we started about what is the business plan, what kind of equity partners which these NBFCs are having, how they are going to perform in last 5 years, what they have done in previous 3 years, what is the mechanism which they have followed post COVID, and what sort of growth in which they are. Then we have been able to see, yes, these NBFCs are there. Yes, their rating is low as of now. Their portfolio might be low, but yes, they are on a verge of growth from last 2 years. And in our segment, we have been able to see seasoning as well. Since all this, two wheelers, four wheelers, they are approximately for 2 years or 3 year time period they have. So we have been able to see one seasoning as well. Yes, these partners are there who've been able to do seasoning, and with that, the confidence has been built up. Yes, these players are there, wherein in terms of backing up, if there is something is required, and these partners have already been backed by large PE based firms, which are impact funds, somewhere which are non-impact, but yes, profitable firms. So this helped us in analyzing the partners. Yes, and then tech plays a very important role in this, in developing these synergies among them. We have built our own system, wherein our own API integrations have been built, and we have been able to do go live with any of our co-lending partner with our lowest time period of approximately 6 working days. That is something which we have been able to develop over a period of time. Then then there are processes regarding escrow that we have followed and everything. But the most important process wherein I would like to say as an NBFC point of view, that what is my cost of funds when I really go with co-lending process. Whether when I say about cost of fund, is it a cost of funds wherein I will be taking from market? Yes, it will include that, but most importantly, it will also include that what sort of risk wherein I would be incorporating in my ECL, that yes, this will be the particular cost which would be added to my total cost, and what cost, what kind of opex which I will be incurring with a particular partner, and how it will get amortized when I add my partners, so as to give a rate advantage to my existing partners. Over and above, I would also like to see that where is the responsibility of recovery stays, whether it is with me or it's with partner. Then we decide that what sort of margins I can expect from a partner. That is something which ultimately form base of all the conversation. Yes, their business plans are important, their p funding, backups, everything is important, but this plays a very important role, that yes, what sort of expected margins on which as an NBFC I really want to play. Then we started, in terms of my repayment strategy, we started a concept. We just divided in, either we can say that as a plain word called repayment reconciliation. No, we have divided this into two parts. It's AUM reconciliation and DPD reconciliation, wherein fortnightly what we have started is that AUM in their books, in their LMS, what sort of AUM that we have as of now, specifically the DPD in their books, because sometimes we have found that on due dates we have found that customer, the NBFC is able to pay the entire installment to us, but end of the day, whether they are able to receive it from their own, from the client or not. And then a bureau reporting will be done by us and from them. And if we do, yes, because since we have received the entire installment from the NBFC, we will be saying, okay, the bureau reporting is right. But that is something wherein DPD reconciliation played a very vital role. Ki yes, in order to assess ki a portfolio in our books vis-a-vis the portfolio in their books is has to more or less match. Then we started a new thing called reconciliation of our escrow account, that whether any balance which is lying in the escrow accounts should not get unattended at any point of time. Either it has to be adjusted, or a proper due credit has to be provided, or a note to be provided to the client, so that we can easily close our day, week, or fortnightly reconciliation. And as I said, if we go ahead with the installment without reconciliation, this will ultimately invite trouble for the future. Secondly, this is more towards a comforting factor, wherein we can easily say that we do have FLDG, wherein, but FLDG will not cover more than 5-6% of your stage 2 assets. Therein you need to know that, because any asset which is still in the stage 1, it has a high chance in order to move into stage 2 and up, stage 2 and stage 3 and onwards. This is where we need to have a control mechanism in terms of tracking the repayments right at the stage 1. And therein the special audits, or monitoring or visiting the clients, forming part of their forming reconciliation as a part of your regular process, that would become your icing on the cake. And whatever sourcing which you have done in this month, that has to be properly reconciled, and a proper reconciliation records have to be kept as and when required. But as I said, special audit played a very important role for us, wherein every quarter or every 6 months, we start doing the audits of our existing clients. For our new clients, we started doing in every 3 months. That's where they also know that some sort of tracking has been done at their end also. Because when there is a psychological advantage is also, when auditor will just go there, will spend time over there, he'll be able to understand the entire process over there. So that's my summary towards repayment, the profitability assigning of the client, and how we choose the client in terms of my co-lending.